you can get money within 5 or 7 minutes from starting the application. We assign a bit higher loan limits at the entrance stage.
What makes your offerings different from others in the digital lending space in India?
If you know how to manage the funding, then it is definitely good for Indian consumers. They do not sell any loans to self-employed customers, while we do.
You are looking for the high risk takers basically.
We just reached to the proper audience who is currently hungry to get a loan and wants to get it fast, and also those people are digitally literate.
Hello, I am Muskan Kapoor from Startup Talkie, and today I'm in conversation with Mr. George Donchenko from Viva Money. In this conversation, we'll be talking about his journey in the finance world, Viva Money's mission to make credit more accessible in India, what lies for the company ahead, and many more. So let's get right into it. So before we get into the Viva Money, I'd really love to hear a little bit about your personal journey. What led you here actually? So I really want to understand, like back in your younger days, like while you were in schools or in your colleges. So did you always see yourself working in the world of finance, or did it happen eventually?
Studying the world of finance, definitely yes. Not since school, because like it was Soviet. I started in the Soviet period. It's like before 91 in India. Once kind of entrepreneurship or some, I don't know, banking was not considered kind of a good career, at least from the state perspective. In the Soviet Union, it was the same year. But like during my university study, like I felt inclined on like to different financial calculations, like to like I don't know different courses related to banking and so on. Well, I graduated from strategic management, but there were several courses related to banking. And frankly, my diploma was devoted to strategic management in the banking industry. Uh, I started kind of my career in the bank. That's exactly, it was kind of a conference choice.
Oh, okay, great. So we have also seen that you have worked across different markets, various different markets. What was your experience coming to India? Did anything stand out for you, be it operationally or how people just simply approach finance?
Okay, there were plenty of things which are different, which really put India kind of as a unique market. At the same time, I have to confess that I had kind of a break of 5 years because between 2014 and 2019, I was not in the financial industry. I was in the services, and that's why I was not following much about the international trends, what was going on, and so on. Before that, none of the countries, neither India or anywhere else, had a fully digital customer journey. I mean, like in 2012 or 2013 or 2014, it was not possible to onboard a customer for a financial product anywhere in the world without physical interaction, without meeting a customer and doing KYC in person. While since UIDAI was introduced in India, it became doable for banks, for NBFCs, to sign up fresh customers fully remotely. And I think, I don't know the story of the COVID period here, but I think COVID also pushed RBI and kind of overall government to make all the processes much more digital than it was like in 2018. So once I arrived to India in 2022, it was like very easy to run the whole process for signing up a fresh customer fully digitally, and it made me really positively surprised because like we don't have any branches. We don't run any agents network because usually in the past, the banks or other financial institutions had just to make a physical meeting with a person, not because they really needed to verify a customer, but because it was compliance and regulatory imposed. So that's the first thing what made India different for me. Because once I was working before in Nigeria, it was not allowed by Central Bank of Nigeria to do any, uh, let's say, fully digitally signed contract. While here, from day one, we introduced e-sign, and that's how we serve our customers.
So now that we have talked a little bit about your journey and perspective and your experience differences in India, now let's get into Viva Money. So for someone hearing about it for the very first time, how would you describe what Viva Money is and what it does?
Just in a one sentence, if someone like not from the financial industry is asking me what is Vivo Money about, I'm saying digital personal loans provider. Just one sentence, because it allows a person at least to grasp what is the product and how we sell it digitally, and we sell kind of a personal loan product. If the person is kind of more in depth involved in the fintech or banking sector in India.
Yeah.
Of course, I can explain that Vivo Money stands out because we provide a revolving product, which allows the customer to use the loan limit multiple times. And frankly, it like makes our interaction with the customer almost lifetime. Because I mean, until you say, Viva, I want to cancel my loan agreement, you can use it in like 1, 2, 3, 4, 5 years. So currently we have 6 years loan agreement period, but you can extend it longer, and you can
All
use
right.
the loan limit. I don't know, 5 times, 10 times, 20 times across this period.
We have seen that Viva Money has been focusing on the lines of credit for Gen Zs and millennials in India. What makes your offerings different from others in the digital lending space in India?
What makes us a bit different, not kind of 100% different.
Yeah, yeah.
So for some of the competitors, they do not sell any loans to self-employed customers, while we do. So because usually, like the data, what is available about salaried individuals, you have much more data for analysis rather than about self-employed customers. And many of the players try to avoid selling to self-employed, or they ask them, let's say, some extensive set of documents, and they make some kind of manual underwriting for the self-employed. So in this way, we're different. We ask the same set of documents for the self-employed as for the salaried, and we make the decision at the same time frame. We didn't take longer time to make a decision for the self-employed customer. So this is, I would say, the third kind of feature which makes us different. So regarding second feature, some of the players they usually start with some small. I'm just using them as an example. They are assigning you a small limit in the beginning. Could be like 5,000 or 10,000. Uh, and frankly speaking, why do you need it? Of course, if you are a student with no great history, you never use the loan. Maybe 5,000 loan limits can be useful for you.
Yeah.
I don't know if you need to buy, I don't know, some appliances for your apartment. What you can do with 10,000? If you need to buy a fridge, a brand new fridge, can you afford it? Usually not. Uh, you understand? So we assign a bit higher loan limits at the entrance stage. So I think those two are major differences. Okay, and the third one, but it is not like because it's a strategic choice, but I would say unfortunately it's a limitation for us. We are currently running business only in 5 states, so we can sell on India, but I don't want to manage it with lower approval rates because I mean,
Hmm.
if we will get, I don't know, some applications from non-targeted states and they
Yeah.
have the same amount of money to sell to the customers, what I can do? I can only cut the approval rates. So better we provide decent approvals to the customers coming from our targeted states than we reject some good customers because we don't have enough funds.
So, with this understanding, now we'll also explore how Viva Money actually started in India. Launching fintech in India, because India has been a very diverse market, it comes with a lot of challenges and opportunities. So, I really want to understand what was your initial vision behind Viva Money? Like, how did you even find this product market fit for you guys? And what challenges did you guys face early on?
So building a strategy, it was, I think, April to August 22. We were reviewing several market kind of entry scenarios. One of the scenarios, and we were honestly initially delighted about those guys like Fred or some others who started from, let's say, transaction,
Hmm.
not the loan business, to build a kind of a customer base and then add some loan products on top of it. But this is a much longer story to turn profitable. So usually transactional products, they have very tiny margin if they have any at all. Because you understand, like UPI, it just provides a good tool for the customer, but it's not a good tool for a corporate player. And so once we explored how it works, we understood that we shouldn't start from any transactional business in India. We should start from loan business from day one. And we like elaborated and we built a credit line product. Once there is a revolving loan limit, but at the same time, the customer is making withdrawal to his or her savings account only. So the customer cannot make direct transfers to some merchants, like what credit card allows. And the customer also turns into AMI schedule. I mean, again, what is different from the credit card? Because over there, it's almost like minimum to pay, what is almost eternal repayment of the debt. So that's how we arrived to this product. And again, why it is better than a personal loan? Because the customer can use it multiple and multiple times. If you know how to manage the liquidity, I mean, the funding on our side, then it is definitely good for Indian consumers to use this type of a product rather than go and get one-time personal loan. And then in the future, they have to reapply again if they need some more funds and so on.
Okay.
So overall, I hope it covers the question.
Yeah, it does. So, since we are talking about the initial focus and how you guys found it, so your initial focus was on salaried professionals. I would like to understand why and how did you expand to the self-employed users?
I would put it a bit differently. While we were building the strategy, we understood that there are three segments of,
Yep.
let's say, income,
Hmm.
like customers who have income in India.
Right.
So the first segment is salaried, but it
Hmm.
is in general twice lower than a segment of self-employed, based on the
Hmm.
official statistics from the government bodies. And inside this self-employed universe, there are, let's say, two subcategories. One are regular self-employed. Doesn't matter whether they are registered or non-registered, whether they pay taxes or don't pay taxes. It's about that they do something like they run a shop, they run some service, like they do it on a regular basis. and there are some, let's call them daily workers. I mean, some people who don't have really any like occupation. They can do like anything, but usually it's very low skilled labor force, and they don't have permanent employment, and they are looking for the employment. They can assist in some shop today, they can assist in some another shop tomorrow, just to earn for their living. And of course, we are not targeting segment number three. We're targeting salaried, and we're targeting self-employed who have kind of a regular setup. So in India, like this split between salaried and self-employed is substantially different from the other countries. If you take China, or you take European Union, or you take United States, the share of salaried is much higher. So there are less MSMEs, there are less self-employed in the other countries in the structure of the population. That's why from this initial strategy planning phase, we understood that we should bring some product for the self-employed segment as well, because it's kind of a backbone for the Indian economy. If we put it away, I mean, some other more smart players will do the same, and we're just losing to the competitors. We just started it maybe 2, 3 months later, because but we started it almost immediately. Uh, so it was not like a year delay to start the sales for self-employed.
Got it. It's pretty impressive how you guys adapted to different customer segments because most of the services or anybody, people usually do not consider the self employed people. So it's great that Viva got into this. So, from your perspective, what makes Viva's credit offerings actually appealing to the younger generations? Like, what is the USP here for them?
Think frankly, I don't want kind of to praise ourselves or like to boast
Yeah,
something. It is just about simple and digital and fast journey. So we are not unique here. Some of the competitors provide more or less the same, because let's call it time to money. Yeah. So you take your phone, you
yeah.
start the application, and how soon you can get the money. If it's not, I don't know, some crazy time, 1 a.m. or midnight, because we do video KYC for all the applications. I mean,
Okay.
to be compliant and to avoid some extra credit risk, even if your loan limit is below the RBI threshold, we still insist that you do a video KYC. That's why, like, if you apply at midnight, you cannot get money in 5 minutes. You need to wait till morning time once our agent is available, and then you get connected, and you get approved. So overall, if it is regular business days and business hours, you can get money within 5 or 7 minutes from starting the application. We just reached to the proper audience who is currently hungry to get a loan and wants to get it fast, and also those people are digitally literate, because
Okay.
like if someone wants to get a loan but unfortunately doesn't understand how to do digital signing, or doesn't understand how to go through the video KYC, despite it's pretty easy, but I don't know, the person is not digitally literate. Unfortunately, he is not our target customer, because we don't like so-called assisted journeys. Uh, how they called it? E-mudras, right? Some brokers sitting in some small shops, and they assist the customers to go via a digital journey. What happens then? Okay, you got the money. So because the broker explained to you like how to answer the questions, how to fill in the application, and so on. And then repayment day comes, and you have no idea how to pay back.
Yeah.
Even if you are honest and you want to pay, You don't understand how to pay, I don't know, via net banking or via UPI because
Right.
you are not financially and digitally literate. We try to cut away the customers if we see that there is some suspicion that it's assisted joining. Assisted joining
Okay.
doesn't mean it's a fraud. It can mean just the customer is not well educated enough to apply him or herself. And unfortunately, those people we don't want to come and take a loan because later on they will face issues on the repayment stage.
So now we'll just move a little bit towards growth in fintech. So maintaining growth while keeping the credit risk low is always a very delicate balance. So reaching break even while maintaining low debt. What strategies or models has helped Viva achieve this while keeping its customers satisfied and retained at the same time?
You see, it's pretty complicated question because a low bad debt for the banks means I don't know 2% write-off. A low bad debt for large NBFCs means I don't know
Yeah.
5% write-off. Once I say large NBFCs, could be like I don't know someone like Bajaj.
Mhm.
So and low bad debt for fintech players like us could be I don't know 8% write-offs. What is crazy high for the base and what is high for huge NBFC players. So if the business model overall allows to achieve profitability with a bad debt of like 8 or 10%, this is fine. If it doesn't allow, either you should screw up on the risk side and apply strict approval rates, or you should increase the product profitability. You should increase the interest and the fees which the client pays. So there should be some balance between like the risk process and of course the funding cost because I mean you need to get the money to bring to the customer and the revenue what the customer is paying. And this is kind of a major differentiator because some players are saying, oh, like the portfolio of Viva is what is currently like I think we're making about 8 to 10% like credit losses. It's too risky. I'm saying, guys, no, it's not too risky at all. It's too risky upon your kind of strategy. So means that they are selling kind of to some better customers, and those customers pay lower interest rates to them. But they will decline the customers which come to us and which we agree to onboard and to provide loans to. This is again a balance between affordability uh, from the pricing point of view and eligibility for a loan. Because again, if we take the name which I mentioned, like Slice, yeah, they provide loans to students. I mean,
Hmm.
with zero credit history, but they take a very low ticket risk. I mean, if the student defaults, like 5,000 is not much. We
Yeah.
are a bit more strict, really. We don't provide loans to customers who never had a loan with anyone else. So, so-called due to credit guys, they are rejected. We don't do it. Uh, we so like from that point of view we are stricter than they are. From another point of view we assign higher loan limits and we are kind of more affordable for the customers. So you see I'm just giving you different point of views. It
Yeah.
depends really whether the bad debt is there is high or whether the bad debt is kind of affordable. It depends on your point of view.
Okay. Got it. And speaking of scaling and growth, what's Viva's strategy for partnering with the Indian banks and non-banking financial companies? How do you guys approach?
We are looking for the funding partners which are fine to take some risk great risk, around 10%, as I mentioned, and who are not afraid in the case to charge kind of higher interest rate to compensate this risk. Why I'm saying this way? Because overall we bring a product, but credit decisions sits with a financial partner because we're not regulated entity from RBI point of view. We are just a fintech and we are not making a decision. Once I'm saying approval rate, okay, this is the decision from the financial partner. Of course, we discuss upfront with them what will be the approval rates, how, like which customers they will reject, which customers they are likely to approve, and so on. Because otherwise, it will not fit our strategy.
Okay. You are looking for the high risk takers, basically.
Yes, but not crazy high because, of course, in some market segments will be I don't know loss of 15% or 20%. We're not going there.
Yeah, got it. So now I'll zoom out towards the broader perspective. What role do you see Viva playing in the India's digital lending space? Like what are the future offerings or expansion plans online that people should watch out for?
So Viva plans to expand its product portfolio. We are gonna add a product for repeated customers to retain them and to provide them higher loan limit. And of course, they will be paying cheaper, lower interest rates because, like you said, the higher is the amount you take,
Yeah.
the more complicated for you to pay back if the rate is high. So it will be kind of pretty simple story. So the best customers will get higher loan limits and they will get cheaper rates. Also, we are exploring some partnerships which will let us do some, let's say, it's not exactly transactional. He or she doesn't need to transfer money to own savings account and then make a payment out of there. And you can pay directly from the loan limit. There are kind of different, let's say, back end processes, what we need to build. There are several models which are already running in India around it, and currently we're exploring how exactly we should build it to make it compliant and at the same time to make it convenient for a customer.
Yeah. So you guys have certain things in line, but as the time goes, you'll plan accordingly. I'm going to do a little bit of light-hearted quick questions for you, just to get to know the person behind the company. You can try to speak whatever comes the first thing in your mind. All right. It will be very quick, very short. Okay. So tell me one simple habit or routine that helps you stay focused.
Like I would say, it's just I think fitness because I mean you need to get kind of clear your mind because different business related issues can make you nervous, can get you stressed, and so on. And you need to kind of to clear your mind to build energy for the next day.
Any app or tool that you just cannot live without.
Well, in India, it is Rapido. Well, maybe it's, I don't know whether it works in the north, but definitely in the south, it's essential because I can't live without. I don't have my personal car, I don't have a personal driver. I'm using cabs.
Okay, pick one. Tea, coffee, or something else to kickstart your day.
Yes, definitely a tea lover. Well, I don't drink coffee at all. And frankly, okay, in my childhood, it was like unique brand of Ceylon-based and Indian-based tea, which was imported to USSR, which we were drinking back at home in Moscow. And I always kind of, on the back of my mind, I always considered Indian tea the best in the world.
Do you have anytime you had faced a failure or a tough call you had to make that taught you a lesson that still stays with you, that it taught you something really important in life?
Okay, the most important thing. let's say in the business side, yeah,
Yeah.
what is business related, is a proper choice of your partners. It's not about the partner being kind of smart. The first feature, which is like zero priority. It's not first priority, it's zero priority is kind of the moral quality that you can rely on a person that he doesn't deceive you, that he doesn't default you. And that makes the choice of your partners pretty slow. You cannot go, you can like to anyone who has money and just set up a business with him or her. Unfortunately, to make it comfortable in the long term, you need to build relations. You need to test the person, and only after that you can really scale up and grow it together.
When you need some break from your work, how do you unwind?
I prefer to go either to a park or even go somewhere outside of the city because, unfortunately, in the Indian cities, it's very noisy. I
Yeah.
mean, honking, some sounds which don't let you relax. Either you need to be somewhere in the center of a large park or even go outside,
So you'd love to spend the time in nature, probably,
definitely.
and enjoy the quiet. Okay. Do you have any quick, short advice for your fellow entrepreneurs working in India or building in fintech?
So there are plenty. So it depends which kind of piece of advice. If you are kind of talking about expats moving to India, what I would say that I would recommend to hire young individuals to the team because it's again a cultural mindset. So a kind of elder and more seasoned professionals, they are more tough in their habits, they're not flexible. While younger guys with I don't know 5 or 7 years of experience, they can be kind of more broad-minded. They can look at some issue and try to solve it in unconventional manner. Not saying no, it's not possible, boss. It's not
Right.
possible because no one in the market is doing it. Sorry, but the like first Indian market is not the only market in the world, so let's have a look at the other markets. Maybe it's done in some other way. Let's try to think out of the box, even if there are some regulatory restrictions. Okay, how we can shape it in the way that it is compliant, but in the same time it is convenient for a customer. So younger guys can do it, elder guys usually fail.
Thank you. All right. Thank you so much, George, for sharing all these insights. It's been an insightful conversation with you. And I'm sure our listeners are going to take a lot from your experience and perspectives with this conversation. So thank you for your time on this.
Thank you. Thank you very much for your time as well.